Signs of calm, signs of continuing hype, signs of the upper end starting to move? The answer is yes, yes, and yes. The largest numbers of properties this year were being auctioned over the last weekend in March. This has given buyers a little more choice and therefore has a cooling effect overall. Added to this were a few cases of overly ambitious sellers not achieving quite what they hoped for, and therefore a few more properties passed in. With new properties hitting the market still ahead of Easter and competing with these leftovers, this too will have a calming effect on prices. But it could simply be a slower moment, not a sign of the market flatlining by any means. There were certainly enough examples of boilovers to keep fueling the hype, and post-Easter, there are traditionally less properties on the market which could see prices surge again. Now to the upper end. This has seen little or perhaps only modest gains in these times, while the say sub $2 million market has been really jumping. Finally, some signs of life in this arena as well. A house in North Bondi on approximately 300 square metres of land achieved a smidge under $3.8 million, a significant result by any measure. A home in Dover Heights, previously unsold, achieved approximately $250,000 more than they hoped for mid-last year. There have been perhaps half a dozen similar examples in the last 4 to 6 weeks, which has given hope to those who have been holding on and waiting for positive signs. There is every chance that this will evolve into a more reliable wave of solid results come June, July, August. We have experienced a fairly solid 3 years of rental growth now. In the early stages, the sales market was fairly quiet, and so the returns relative to prices were on the improve. There was even a point where we saw that old and in recent years rarefied air of the 5% gross return, whereby a $600,000 apartment could expect a $600 per week rental. Not to say that we should give up hope, but the recent jump in the sales market has restored a gap, and probably anything over 4% is acceptable. As we reported last month, the most unusual aspect of this, however, is that the rental and sales markets traditionally travel in opposite directions. We're now enjoying a sustained period of both rising in concert and neither showing signs of that changing anytime soon. Bottom line? Well, probably just to enjoy it while we can. There have been times that test investment property ownership with higher vacancy levels, drops in rents, high interest rates, etc. But for now, happy days. Nudge up the rents every so often with little risk of vacancy, watch your asset grow, leverage further into another property if you're in a position to do so. We welcome an opportunity of discussing what this market may mean for you anytime.